Hi everyone, you're watching me in Success Ledger videos, and this video we gonna talk about golden rules of accounting. If you want to master in accounting, you just need to understand the rules of accounting. We just got three rules. Just three rules. If you know it, then you can master in accounting. This video is mainly focusing on 11th, 12th commerce students, BCom, MBA students, and whoever into professional studies like CA, CMA, or CS, or in others professional studies, or whoever are running their own company and they want to know what is coming inside into the business, what is going out, and how we can enter the transactions into their ERP systems. Then you just have to understand what is debit, what is credit. And before understanding that what all comes under debit and credit, you need to know the rules of accounting. Trust me, there is only three rules. If you understand the three rules, it is very easy to make a journal entries. Let's get into the topic. Before we know the golden rules of accounting, you need to understand the basic terms we use in accounting. What is income? What is expense? What is asset? What is liabilities? Let's see in this example. Mr. Peter is an individual, earns a salary as a primary source of income of rupees 2 lakh per month. You can connect with your own scenario. And his incurring expenditure of 1.2 per month as a household expense, traveling expense, EMI, etc. He also have a fixed deposit in bank of 20 lakh, and also he have a loan for his marriage purpose. He have took a loan for his marriage purpose of rupees 15 lakh. Let's see what is income, expense, asset, and liabilities. See, his salary is the primary source of income. He's a salaried employee, and the salary is his primary source of his income. Then salary will be his income. Okay, then he is incurring expenditure. When you run your own family, then you will be incurring rent, electricity, water, or other expenditures like groceries, all kind of household expense, right, and EMI and everything. So these kind of expenses will be considered as an expenses. Okay, and deposits we may have a fixed deposits, or we may invest in gold or invest in shares. These all will be considered as an asset. Okay, and if we owe money to bank, like loan, we have taken a loan, and these kind of loan we owe money will be considered as a liabilities. Let's understand. If you know the basic terms we use, like what is income, expense, asset, liabilities, then you are ready to know what the rules of accounting. In this slide, I have given you the examples what to be considered under these four categories like income, expense, asset, liabilities if you're running your own company, and these will be the possible expenses, income, assets, liabilities. You can take a screenshot if needed. As I said earlier, there are only three rules we need to consider as a golden rules of accounting: personal account, real account, nominal account. Whenever you record any transaction, you will be placed in a position to identify the transaction. Is it a personal? Is it a real account? Is it a nominal account? After you identify it, you can easily understand, you can easily place it, what all to be debited, what all to be credited. So to understand what all to be debited, what all to be credited, you need to know this kind of transaction can it be placed under personal, or can it be placed under the real, or it can be placed under the nominal. For this, you need to understand what all the transaction can be placed under the personal. The accounts of like person name or the entity name can be placed under the personal account. What is real? What all the transaction can be considered under the real account? Assets and liabilities. Just blindly you can follow this. Cash is an asset. If you bought a furniture, it will be an asset. If you have a deposit in bank like FD, it will be your asset. If you owe money to a bank, like if your friend gave you a loan, then you owe money to your friend, it will be your liability. Whenever you owe money to someone, then you are liable to pay the money to other party. So these will be considered as a liabilities. So whenever you have asset and liabilities, then these all the transaction can be place it under the real account. If you place it under the real account, you can check debit what comes in and the credit what goes on, which means whatever the asset comes inside the business or comes into your place will be debited. What all the asset goes out from your business, for example, you're selling a machinery, you're selling your furniture, which means your furniture machinery goes out from your business, then these will be considered as a credit. I can clearly explain you in an example, don't worry. Another one is a nominal account. All kind of expenses, all kind of incomes, all kind of losses and gains will become under the nominal account. If you categorize the transaction under personal, real, nominal, then you can easily place it under what is debit. What all to be accounted under debit, what all to be accounted under the credit. Let's understand this with an example. Let's start from personal account. Here I have given you the rules. The example comes with a meaning. You can take screenshot. Okay. So the personal account. What is debit here? What is credit? The receiver name. I told you the personal account, it contains the person name or the entity name. Entity means company, firms. Okay. So you can consider the person name or the entity name, then you have to put it under the personal account. Just check the debit and credit. If you receive, there is a receiver name, which means, let's see in an example, Ram gives cash of rupees 5,000. Okay, let's see in the eye of a business. You own a company. Let's see it in the eye of a business. Someone is giving money to me. Okay, which means Mr. Ram gives cash to me. Okay, I'm having 5,000 and Ram is giving me 5,000 to me. So who is giving me the cash? Ram is giving me the cash. Here Ram is a person's name. I told you whenever you have a person name or entity name comes under the personal account. Let's check debit the receiver name, credit the giver name. Here Ram is giving me the money. So giver name is Ram. So we have to credit the Ram account, right? Yes. Let me take place of it. Yes, here the Ram account is credited. And what comes into my hand? Cash. Cash is a real account. I will explain in a next slide about the real account. Let's stick up into the personal account. So Ram account, why it is credited? Because Ram gives me money. So giver name is Ram. So here the giver name is credit. So I have credited the Ram's account. Let's see in another example. Paid salary to Mohan. So I own a company. I am paying salary to the employee. Okay. The employee name is Mohan. Okay. So I am paying them a salary. Okay. To Mohan. So here you might have think the Mohan is receiving the salary. So why don't we consider as a receiver? Let's understand. So here in the eye of a business, Mohan is providing me service. Is what is Mohan doing? He's giving me service, which is he's getting paid for the services he provided to me. So he is providing me service. So he is giving something to the company. Mr. Mohan is provider. He is providing service to the company. So Mr. Mohan will be considered as a giver name. So here all kind of giving the giver name will be credited. So Mohan is giving me the service. He's providing me the service. So I have credited it. Mohan account will be credited. I hope you can understand the personal accounts. See, I have given you the meaning as well. Ram is a personal account. And here the cash is a real account. I will explain in another slide what is real and nominal. Okay, so here the RAM is a personal account. Here the cash comes in, so debited. Okay, Ram is a personal account and is a giver of cash, so I credited. Here Mohan is a giver of service, so I have credited this account. Let's see about what is real account. So in the real account, all kind of assets and liabilities will be placed under the real account. Here the debit what comes in, credit what goes out. Let's see an example. You have purchased a furniture for cash. You have purchased a furniture for cash. Okay. So which means furniture comes into my business. For purchasing furniture, I am paying cash to that, cash to the supplier. Debit what comes in, credit what goes out. Furniture comes into my business and cash I'm paying to for the purchasement of furniture, which means furniture is coming into my business and cash I'm giving away from my business. So here the furniture is debited and the cash account is credited because the cash is going out from my business, but the furniture is coming inside my business. It's as simple as that. Let's see in second example. I am selling a machinery of rupees 10,000. Okay, I'm selling a machinery, which means a machinery is going out from my business. Against that, I'm receiving cash. I'm not giving my machinery of free of cost. I'm giving my machinery. I'm selling my machinery for cash. I'm charging for selling my machinery of 10,000 rupees, which means cash is coming inside into my business. Machinery is going outside my business. So debit what comes in, credit what goes out. What comes in here? Cash of rupees 10,000. So I have debited the cash account. And what goes out from my business? Machinery. So I have credited it. Let's understand what is nominal account. Under nominal account, we will be debiting all expense and losses and we will be crediting all income and gains. Few of you may not know to differentiate what is expense, what is loss. I'll give you a simple example. You are owning a own business. Let's imagine you're owning your own company. You're paying salary to your employee. Okay. Here, the salary which you're paying to your employee, right? That will be an expense to a company. Okay. But when you sell a machinery, let's say you're purchasing a machinery for rupees 7,000 rupees. Now you're decided to sell the machinery. You're purchasing it for 7,000, but you're selling it. When you resell the machinery, you are selling it for 5,000 rupees. So there is a loss of 2,000. When you selling it at a lesser value of your purchase cost, then it will incur loss to your company. This is how we have to categorize what is expense, what is losses. Likewise, what is income, what is gain? What are the income we can be considered it as like sales revenue, or if you receive any investment income, like you have received a dividend out of your investment or you have received an interest from your fixed deposit will be considered as an income. Then what are gains? Okay, like in an earlier example, you're selling a machinery which is a purchase cost of 7,000, but when you decided it to resell the machinery, now you can resell it for 10,000. So there is a profit of 3,000, right? That you have gained 3,000 rupees. So this is how you have to categorize what all to be considered as an income, gains, expense, losses. After you know about this term, then all kind of expense and losses will be debited, all kind of incomes and gains will be credited. Let's see in this example. Paid rent of 2,000. Here, see, by here you might have an idea of every transaction you see, there will be debit and credit. Every transaction, for every single transaction, there will be a debit and there will be a credit. So here in this transaction, you are paying a rent of rupees 2,000. Okay. So here the rent is a nominal account. I told you all kind of expense incomes will be considered under nominal. So here the rent is an expenditure, right? Then it will be considered as a nominal. What is cash? Why it is considered as a real? Cash, which is which is adding economic benefit to your company, will be considered as a asset. So it is not your income, it is your asset. So asset, if cash is an asset, then it will be considered under the real account. Okay. You are paying rent of rupees 2000. The rent is an expense, so it is debited because it is a nominal. Let's check in the rule. All kind of expense will be debited. So rent is an expense, so it is debited. And cash is a real account. I told you what comes in will be debited under the real account. Debit what comes in, credit what goes out. Here the cash is going out. You are paying rent of 2000, which means the cash is going out of your company. So the cash goes out, so it is credited. Let's see in another example. They received a commission of 3000. Let's take commission as your income here. Okay, your commission is a nominal account. I told you expense income considered as a nominal, right? So commission is a nominal account. Here the cash is a real account. Cash comes in because you are receiving a commission income. You are receiving a cash of rupees 3000. So the cash what comes in, debited. And commission, commission is an expense, so it is credited. Sorry, commission is your income, so it is credited. By here you have a clear idea of what are the rules we follow in accounting, which is a personal, real, nominal, and what all to be debited, what all to be credited. Just follow the rules which I mentioned under the real, nominal, and personal. This is a traditional way of accounting. For many number of years we are following these rules. Okay, so uh, I hope you understand this topic. What are the common mistakes we do? Memorizing without understanding. Don't do it. Understand the concept and enjoy accounting. Confusing real versus nominal. I hope this video will help you to clear what is real, what is nominal. And forgetting to identify the account type. I told you, whenever you record the transaction, you need to identify, is it a personal, is it a real, is it a nominal. If you identify it, just follow the rules comes under the every account we have, then it's simple as that. Then you can easily pass journal entries. Thank you for watching this video. I hope this video will be helpful for the whoever is eager to understand the golden rules of accounting. And if you like this video, please like and share and subscribe Success Ledger, where we master finance and achieve success.